Hey, everybody. Good day to you. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. If you're not familiar what we do here, we talk about stock earnings each and every week because there's always some going on. Today is Monday, June 23rd, 2025. And even though we're getting towards a very quiet period for earnings, we got some big names coming up this week. And as we go through our list, we will highlight some of those. So we got good candidates this week. Next week is going to be very quiet because we're approaching the 4th of July holiday. But right after that, we get into the next full earnings cycle, and things kind of heat up as we move through the month of July. So you're going to want to stick with us today, see what we have in store, and let's get rolling. All right, don't forget, we go through plenty of stocks here during our short little video. So you can use the chapter feature at the bottom of the video and just touch on each of the stocks that we talk about. And again, we talk about how to make money off of earnings. We don't just talk about earnings per share or anything like that. We talk about what the option market makers are pricing the options at and what type of strategy we should be deploying to make money on a stock as it goes through earnings. And as you can see on our sheet here, we have two categories. We have very volatile stocks. Those are called breakout stocks, and very quiet stocks. Okay, stocks that just don't move very much. And for us, single digit moves are quiet, really anything under 9% or less. And so you might not think that 9% is a small move, but in relation to what stocks do around earnings, they are. Okay. The breakout stocks, any double digit move qualifies. And there are some big movers on this list for this week. So we will talk about them as we get going. Let's go ahead and jump into the list and dissect it. We'll start with the quiet stocks first. And I'm going to give you an example of a quiet stock. Okay. Now, this stock is Pfizer. It does not have earnings this week, but I use this as an example because you can see that not only is Pfizer a quiet stock, all the time, but it's especially quiet through the earnings season. In fact, it has a move of less than 4% over the past 5 earnings cycles. So this is what we consider a very quiet stock. So for something like this, what we want to do is sell premium going into that earnings announcement so that when implied volatility that gets built up before each and every earnings, it drops. That's how we make money on these positions. All right. So let's get into our list here. I'll give you a quick little snapshot, but we're going to look at the charts for each of these. As you'll see, there's some big names here. So let's go ahead and jump over to the charts here. And we're going to start with KB Homes. All right. Now, KB Homes is following up with Lennar, and we've had 2 home builders in the past 2 weeks declare earnings. So KB Home is coming in next with a move that is going to be pricing in right now a little less than 8%. Okay. So you might think that's, oh man, that's a big move. And well, an 8% move on a $50 stock is a pretty big move. However, it's not what we consider a breakout. So what we like to do is sell premium here. The only problem with KB Home is they don't have weekly options, and the next earnings cycle doesn't expire until July. So you're looking at July options are the front month options at this point. So you're looking at several weeks to be in a trade like an iron condor or a butterfly, something like that. And the stock could move around on you. So I don't know that we would be doing any trade on KB Home, but you can see that KB Home is on our list for quiet stocks as it moves less than 10% each and every earnings cycle. Then always a crowd favorite is Carnival Cruise Lines or Carnival Corporation. All right, they announce on Tuesday morning, tomorrow morning before market open. And again, here's another one with an expected move of less than 8%. Okay, so these are kind of up there on the expected move list, but they're not considered breakout stocks. All right, we'll get to those in just a moment, but first let's go through paychecks. All right, they have earnings on Wednesday, June 25th, before market open. This has an estimated move of less than 6%. I happen to like this stock because it is pricing in at right around $150. This allows us plenty of strikes above and below to sell premium on. We never sell naked. Okay, we always hedge by doing an iron condor or something like that that is a hedged strategy, okay, has a defined margin requirement for those. And we would do that as we go into earnings. Probably tomorrow is when we would put that type of trade on, today or tomorrow, on Paychex, if we get the pricing right. Okay, that's kind of the key here. All right, so Paychex does declare Wednesday before market open, and again, expected move here. Right now, it's pricing in less than 6%. Okay, now as we continue through our list, General Mills, they will announce on Wednesday before market open as well. And you can see here that they have an expected move less than 5%. Now, this is a $50 stock, so there could be some opportunity here on this particular a company as they announce earnings before the market opens on Wednesday. And it's been in a downtrend, but make no mistake, you never want to guess direction on a earnings announcement, because there's all sorts. A company could have awful earnings and the stock pop 20%. I mean, it's just amazing. It all has to do with the outlook. Okay, so we'll see what General Mills has to say as we go through earnings this week. And then also a quiet stock that we have is McCormick, the Spice People. All right. So McCormick has earnings on Thursday, June 26th, before market open. The expected move here is less than 5%. And with this being a $75 stock, it's currently at $73.32. This is a good candidate to try to price out an iron condor or some sort of selling strategy going into that earnings announcement. And how you do that is you take that estimated move, let's say 5%, and you try to get your break evens at 6, 7, 8% away from the money, while taking in a respectable amount of premium. Okay, you don't want to be doing nickels or dimes, but you definitely want to try to get, the general rule is 25% return on that, and that's a good rule to live by when dealing with these stocks. And I often try to go for better returns than that. All right. Now, believe it or not, Nike appears on our quiet list this week. Nike announces on June 26th, that's Thursday, after market close. Okay. Now, the expected move here is a decent amount. It's right around that 8% number. Okay. And but you can see that last time, okay, this is a decent move for Nike on the last earnings announcement, but that move was 5.4%. Okay, 5.4% was that drop right there at the end of the day. It dropped and traded lower, came back, right, and then closed here, and at the close of 67.94, and that was a decline of less than 6%. Okay, this gap right here is other news related. Okay, probably tariffs. Okay, because that was back in April. All right, and then you see the climb up here, and now we have earnings coming up on Thursday, and we expect the move of less than 8%. And at a $60 stock, we can probably get a nice trade on Nike, but it all depends on the pricing. Okay, the pricing as we go into that earnings announcement. Where are these options trading? What do the market makers think is going to be happening? And let me tell you what, next to bond traders, option market makers are some of the smartest guys in the room. So always pay attention to how they're pricing options. Okay, much better than the analysts, I'll tell you that. Okay. All right, so that is it for the quiet stocks. Let's move on to the breakout stocks. Now, these typically are much more exciting. They are usually well, we consider double-digit movers as breakout stocks. So there's always this big move either up or down as we go into these. And let me show you an example of a breakout stock that we're focused on here. Here's Akamai. Now, Akamai does not have earnings this week. Okay, let me repeat. Akamai does not have earnings this week. This is just an example. But you can see in the last 5 earnings cycles, look at the big moves that this company makes around earnings. Okay, and you never know which direction. Okay, 4 earnings cycles ago, it was a move higher, and then the last 3 have all been lower. Okay, followed by a rally at some point. Okay, or a move lower and then a rally. So we'll see. But again, Akamai does not have earnings this week. Let's get into the stocks that do have earnings this week. And we're going to start with kind of a crowd favorite. So here's our list. Okay. So you'll see some familiar names. Notice there we have BlackBerry on the list. If you have not seen what BlackBerry has done lately, you might want to take a look at that stock. The company is making a little bit of a comeback. There's a certain generation that are dropping their iPhones and going to BlackBerries. That has been reported on several times by many different sources, and it's very, very interesting. In fact, I'll go ahead and pull up that chart. I don't have it on my list to look at, but we'll go ahead and take a look since I'm talking about it. Look at this nice little move from $3 to almost $4.50. Okay, a $1.50 move. Almost 50%. Move on this little rally here. So it's definitely on a nice little run here. But I priced out a trade, and they're expecting about a 15% move. And the option is really for these types of stocks, what we do is a straddle or strangle. Okay, a straddle or strangle, and then right now the BlackBerry is pricing in about a 15% move when they have earnings this week. But let's get to the stocks that do make our list, and these are the more familiar stocks that make the biggest moves. Okay, typically for the week. That's what I focus on: the familiar names that make some of the best moves for the week. Okay, so we're going to start here with a company called Aero Environment, okay, or Aero Environment. Always a little tricky for me to say, okay. AVAV. Now, this stock is a mover, and I see what I did there. Let me just edit that because I don't like these to be errors here. This is greater than 15%, not less than. Greater than 15% move that the option market makers are pricing in. And one thing I do love right now is this consolidation pattern as we go into earnings. Okay, they will be Tuesday, so tomorrow, June 24th, after market close. And again, the expected move is greater than 15%. Now, if you haven't seen this stock before, okay, here's the previous earnings announcement. Now look where the stock opened. It opened up at 110. It was trading the previous day. It closed at 141, and then this stock opened at 110. This stock dropped $40. It did rally up during the day, so it's not the best kind of example. But yes, during earnings cycles, you can always know because this thing gaps around. And here we had a very nice gap from roughly 197 to 165. Okay, so a $30 drop there on a $192 stock. I mean, this thing moves around. So the problem is that this is a $192 stock, as you can see. So the options, this would not be a trade for smaller accounts. Okay. Suggested account size would probably be $25,000 or more for a trade like this, because the debit is going to be around $2,000 or more. And so you might need at minimum 25,000, probably more like 30 or 40,000 in your trading account to be able to trade stuff like this. Now, don't worry if you got a smaller account, because there's always opportunities for you, and I'll get to some of those in just a moment. So hang with me here. I've only got a few stocks this week, but Federal Express is also classic mover. Okay, they have earnings announcement on June 24th. That is tomorrow, Tuesday, after market close. The estimated move here on Federal Express, or excuse me, FedEx, is greater than 13%. And the stock does tend to move around. Again, this gapping around right here that you see was tariff related, but here's the earnings. Last earnings event, the stock closed at 246.21 and opened the next day after earnings at 219. Okay, 219 approximately, and 219.81. It did rally up during the day, but FedEx typically makes a big move. I thought I had, there's another earnings event. Okay, here you go. So here, back here, look at this. Had an expected move greater than 11%, and the actual move here back in September was 15%. Okay, so this is what you can expect from FedEx, and given where we are with the economy and everything, really, it is going to be up to the earnings call. Okay, I wouldn't focus on so much of the earnings per share or the revenue. That does carry some weight into the potential move, but it is what the outlook is, what the CEO says for the outlook moving forward. And this will be critical as we head into July, where the deadlines expire July 9th. And there's all sorts of comments going around now about possible tariffs and possible agreements and those sort of things. So I love the consolidation pattern here. Again, this is a $224 stock, so the trade will be as expensive. Believe it or not, I priced one out a little while ago, and it wasn't as expensive as on AeroVironment. Okay, so AVAV. FedEx was a little less expensive, and I would try to get any straddle or strangle priced in around 10%, honestly. If I was going to put a trade on this, I would want my pricing to be about 10%. So 10% of 224 is 224, and then you multiply that times 100. So that's $2,000. You're looking at a little over $2,000 for a straddle or strangle on a FedEx. So again, for bigger accounts on that. Now, getting a little bit more reasonable, another stock that's going to be in the spotlight this week is Micron. Micron does have earnings on Wednesday, June 25th, after market close. The expected move here is greater than 13%. Now, although it does not have a consolidation pattern going into the earnings, I do love the vertical move that it has. These always get retraced. These really vertical moves higher always get retraced, but this sets Micron up for either a big move higher or big move lower. Okay, that is the thing. Could this stock just knock it out of the park and all of a sudden open up tomorrow trading at 145? Possibly. Or could it open up tomorrow trading at $90? Okay, again, or excuse me, Thursday morning, because after market close on Wednesday is when Micron announces their results. And again, not only on earnings per share and revenues, but on the outlook that the CEO will give on the earnings call. That is where the money meets the road, right there, where the rubber meets the road. Okay, that's where the money's made, is right on those comments. Okay, we got two more stocks to go that are on our breakout list. Now, a big potential mover here is Dactronics. All right, DAKT is the symbol for Dactronics. They have Wednesday before market open, okay, as their earnings date. Okay, so that's Wednesday, June 25th, before market open. The estimated move here is greater than 20%. Now, this stock is a $14 stock. Okay, so straddle or strangle here is going to be pretty darn affordable. All right, even for smaller accounts. So this is where you kind of get your opportunity. Normally, I don't like doing trades on stocks under $15 for a variety of reasons, but there are some, and Dactronics is one of those, that could offer some good returns with a move that it normally makes through the earnings announcement. Okay, And you can take a look here at the last earnings announcement. Look at this big drop here going from 14.33 and opening up at $11. Now, okay, 14 to 11 doesn't seem like a big move, but that's a big move for a $14 stock. Okay, $2 of a $14 stock is a pretty darn big move. Okay, so we're expecting that from Dactronics later in the week. All right, so closing out today, we'll have Walgreens. Walgreens is an $11 stock. But again, we have the opportunity here for an inexpensive stock that makes typically big moves around their earnings announcements. The earnings here are on Thursday, June 26th, before market open for Walgreens. The expected move is greater than 20%, okay? Is greater than 20%. So we will see what this stock does. And if we go back in time, you can see that, this stock it'll definitely move. So here's a move back in January that the stock closed at $9.22 and closed the next day at $11.76. So a big move for Walgreens. Now, we'll see what happens, but we could see that type of move again as we go into earnings later on this week. All right, so each and every week we let me show you the list one more time, because there might be a couple of names on there that you like Acuity on Thursday. That is a quiet stock, okay? And then some other names, Jefferies, which is one of my favorites, okay? That's a financial company, big financial company. They have earnings on Wednesday, and they are a breakout candidate, okay? So there are some names on the list that we didn't touch on, but again, we look for the most familiar names with some of the biggest or some of the quietest moves, and that's how they make our list. And I will tell you that APOG on Friday morning is another breakout candidate and a potential big mover. So you would want to price that out as well. Okay, so a rare Friday morning breakout candidate, and that is on the books for this week. Okay. So each and every week, we talk about the trades. I give out a trade each and every episode, and we talk about it the following week. All right. So we are in a very interesting time, because this week you saw the names. We have FedEx and Micron and McCormick's and Nike. Okay, some big names. Next week is going to be very quiet because it's the week of the 4th of July. Traders are already kind of taking the holidays, summer break, getting out of the town with the kids, that whole deal. Okay, so next week will be very quiet, but make no mistake, we come back from the 4th of July, and that very next week, we start heating it up. And the week following that, boom, we take off with the second round of earnings. JP Morgan is that week. And so 3 weeks from now, okay, as we get into the middle of July, that's when the next earnings cycle starts. And but 2 weeks from now, 2 weeks from today, things start heating up again. So you'll want to join us each and every week as we go through earnings call. Okay, so let's get to the last trade that we did. We've been gone for just a little bit on our own little vacation. And the last trade that we did was on Deckers Outdoor. Okay, now Deckers is one of our favorites. Okay, it is a breakout candidate each and every earnings cycle for now. Okay, until its behavior changes, it will always be on our breakout list. And you can see here that this stock was priced about $1,100 for the strangle. Okay, so this is a strangle. I can tell by the black line that you see there and the risk graph on the right-hand side and the flat bottom, okay, as it dissects price. That dark blue line that's horizontal there is dissecting price, and then where it is in P&L on your risk graph on the right, all right, and you can see that we were set up right in the middle of that strangle and looking for a big move. So how did this stock do? Well, it did not disappoint, okay? The stock made a very nice move. It was down over 20% on the open. It did rally up a little bit. It closed lower by 19.86%, and that was that gave us a profit of over $1,300, actually closer to $1,400 on our $1,100 debit. Okay, that was a 110% return on risk in just 4 days. That is the power of these earnings trades that we do. So, especially with the breakout stocks, we have some tremendous opportunity for profits around each and every earnings cycle. So, what do we have for you this week? Well, as I mentioned before, we're going to take a look at Dactronics. That'll be our trade for the week. DAKT. All right. And the straddle. Okay. And I can tell by the little point there on the black line of the risk graph, this is a straddle. All right. Around the $15 mark, or $14.50, I believe. Yeah, it looks like the $14.50 level. This would be a straddle, and I can tell. So this is coming in at $198. Okay, right at $200, give or take. Okay, it was a little cheaper than that when I priced it out this morning. So we'll just call it $200 just to be safe. $200. So even a small account, like a $10,000 account, you could actually do 2 contracts and still be under our threshold of 5%. We never risk more than 5% of portfolio value on any single trade. So here we would probably do 2 contracts and look for a big move on Dactronics as we head into this earnings cycle for this particular company. Okay, so that is it. Each and every week we go over earnings. We appreciate you being here. Please like and subscribe. We do it every week. And if you hit the link that appears at the bottom of the screen here of ewotrader.com/straddle, you can download this as a free guide to download how I apply these strategies to earnings. Okay, show you exactly how I would do it. All right, and that is our free gift to you for joining us. So I will be back next Monday, and we will take a look at how we did on Dactronics. Plus, I'll have a new opportunity for you. Maybe it depends on where option prices is, but the week after we get going again. So you'll definitely want to join us each and every week, because there's always something going on here on Earnings Call. That's it. Everyone have a great trading week. I will talk to you again soon. Take care.